Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the chart. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just created this monthly M pattern. Now, in general, after the creation of an M pattern, what we would expect is for the market to create a potential move higher for the completion of the pattern at the neckline, which is the previous support turned resistance. So here on the monthly, what we could expect is a reversal higher for the completion of this pattern at the previous support turned resistance. We can also notice that by looking left, this area was previously acting as a very strong monthly demand and support area. In fact, from here, all this massive move to the upside was created. And at the moment, the market has just approached this exact same zone from which there is definitely the possibility to see a rejection to the upside, potentially also completing this monthly M pattern at the neckline, which at that point would also mean a rejection of this previous support, which is now still acting as support and demand. So at the moment, here on the monthly, everything is indicating the possibility of a move higher away from this support zone. Dropping down on the weekly time frame, what do we have? Now, on the weekly, we can notice one quite important thing. We can notice how the market has just created this candle here. So a candle with a green body and a very long wick. Now, usually when you see a candle like this, the next candle is supposed to fill in this wick and create a continuation higher. So also here on the weekly, we can see how there is the possibility for some bullish price action. Looking left, we can identify even more precisely this previous level of support, which we can see that this market has just entered. So there is also the possibility to see a bit of a deeper test of this support zone and then to see the rejection to the upside. Now, dropping down on the daily, this is where things get very clear. In fact, we can notice how at the moment, without any doubt, the market is in a downward channel. In fact, we can notice how we have the bottom of the channel here and the top of the channel here. Now, until the market will remain in between this resistance and support, we can simply expect more movement inside of this channel. However, as we are approaching the low of the channel, there is a possibility to see a reversal to the upside away from this level, considering that, as we have already identified, this is also the support that we have identified on the monthly, on the weekly, and we also have that monthly M pattern. Now, here on the daily, it is no surprise that the low, so the support of this channel, is lining up precisely with those two support levels, because that creates confluence of support, which is what usually the market tends to respect. We can also notice that if the market will go and test the low of this channel, it will have also created a manipulation of all the people that longed here and here that have their stop losses below these lows. In fact, if the market goes and tests this channel, essentially what will happen is that all these stop losses will be triggered, and that is exactly what institutions need. And we will go now deeper into that, because always remember that in the market, for every buyer, there needs to be a seller. For every seller, there needs to be a buyer. Since we are approaching institutional demand and support area that we have previously identified, there's a good chance to see a manipulation inside of that zone, which could come in the form of a stop loss hunting of all these stop losses, because at that point, if you bought, a stop loss is simply a sell order. So by triggering stop losses, institutions can create artificial selling pressure that they can then use to fill in their orders. That is why you see very often stop hunting in the market. So there is a good probability that on a test of this area, we could see a rejection higher away from this zone. Now, if we go and see what we have when it comes to the commitment of traders, so what institutions are doing precisely, the non-commercials, and we check the data precisely for the AUD, what we have to first of all keep in mind is that if we're checking the data for the AUD, we're actually already checking AUD-USD because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have slowly started increasing once again. We went from minus 96K to minus 80K net positions, but we still don't see a massive increase of net positioning. However, that could definitely come if we get a stop hunt below this support zone, because here is where all the stop losses are, and this liquidity would give the possibility to institutions to start to load up their longs. And at that point, we could see that also reflected here with the new report. And that would definitely increase the probabilities of a potential move higher away from the zone. So if the market will reach this confluence of support area, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for a rejection away from this confluence of support area. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I'd really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment the time to join with this special promotion is starting to run out. So I really suggest to go and check it out as soon as possible. You find the link in description. And when you go on it, you will see that directly from here there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below and I will see you in my next video.